Hello everyone. Let us first begin with technical analysis. First we'll begin with introduction of technical analysis. What is the difference between technical analysis and fundamental analysis? In technical analysis, you study price and volume. In fundamental analysis, you study various things about a company, maybe various macros you would study the balance sheet, P&L statement, etc. We'll go on fundamental analysis some other day. We'll first begin with technical analysis. Technical analysis basically study of historic price and volume behavior. It is study of historic price and volume behavior जो हो चुका है. It is not going to help you predict future. What technical analysis does is कि अब ये हुआ है and this is the action we need to take. It's a reactionary tool rather than a predicting or forecasting tool. More of. And the most important premise of technical analysis is that price is God. As they say, bhav bhagwan che. That is the most important premise of technical analysis. It considers that price has captured every detail, every fundamental detail, known as well as unknown. And the biggest misconception amongst people is that technical analysis is just useful for traders. Trust me, technical analysis is very much useful for investors as well. Most fundamental investors say the technical analysis is what? They just think it's a kind of focus. But it is not. As retail investors, we cannot capture many finer details about companies, the balance sheets, their cash flows, but these details are already captured by the market. Market knows everything in advance. Doesn't mean that it is efficient. There are inefficiencies to be exploited, and that's what we are going to do. So first and most important thing, price discounts almost everything. Now into the technical analysis, the most important thing that we would learn is something called Dow theory. Okay. Trust me, this is probably the most important thing about technical analysis, which many instructors don't teach, which is like, this is the basic. This is the premise of whole markets, that every market, maybe commodities, currencies, stock markets, this is the premise of every kind of trading. It is probably the most important tool you can use for your investing as well. Somehow this is not covered in many places. So this is probably the most important video because we're going to consider the most important theory of trading, of technical analysis, and it will be very useful in investing. As we progress, you will understand why it was very useful in investing as well. So what Dow theory says is that anything, any price of maybe a commodity or a stock or maybe indices, it moves in a pattern like this. If it is going up, it would go up like this. It won't go up like this straight. If it is going down, it might move like this. It won't go down straight. So I mean, it may not be exactly similar, but this is somewhat the kind of price action that we see if you open up the charts. What we want to see over here is, there is also another kind of market, which is this, where price is kind of not moving anywhere. What we want to study is, how do we make use of this or this to our advantage? What happens for any price move? A price would move somewhat. Okay, this is the major trend. Okay, this is the major trend. If you open your charts, you could see this on a weekly or monthly time frame. Monthly is mostly useful only for long-term investors. It is not probably what you would like to see for your positional trading or intraday trading. Weekly is probably the most important time frame that I have came across. So this is probably a weekly price movement, a weekly price action that you can see in your charts. This is then comprised of smaller daily price actions. And this would further be comprised of smaller hourly time price actions, etc. Okay, what we are going to focus on is probably most important is weekly and daily, and if anyone wants to do intraday, he can check hourly. Anything beyond this, below hourly, is probably not very useful, not very accurate. So let's begin with Dow theory. Any major price move moves somewhat like this. This you can understand that the stock, let us consider stock for reference, is in a uptrend. If you connect the lows like this, you can understand that a stock is in a uptrend. And when trend changes, it would be more like this, somewhat. This basically is not the change of trend. Okay, the change of trend will happen only when this is also broken. You have got two filters. Always, to understand a trend, you have to first draw a trend line. You follow the price action on the trend line, and to understand change of trend, the first thing is breaking of this trend line. Once trend line is broken, you have to check if the previous low was broken or not. Once this both are broken, this price would somewhere move like this. When you get this confirmation, the confirmation is that the price has now made a lower high and a lower low. This is when the trend has changed. You cannot predict this just by this break of trend line. And this year entire you see the series, you would see higher highs, higher low, higher highs, higher low. Till you see this happening, the price is not, the trend is not changed. The price is moving in a trend. In an uptrend, it would make higher highs and higher lows. Similarly, in a downtrend, what we are going through now, what you would see is that price action is moving somewhat like this. First thing, lower highs, lower lows, lower highs, lower lows. This confirms that stock is in a downtrend. You don't need, it's not a rocket science. You just look at the chart and you have it in front of you that this is a downtrend. What you do is, you draw a trend line connecting this. Pardon my limited drawing and writing skill, handwriting, poor handwriting. Okay, you draw a trend line over here. Your first rule to understand the trend has changed is breaking of this trend line. When a price would move like this, this is when the trend line is broken. This is your first sign that the trend is changed. Your second sign is maybe breaking of this. This is your second sign. And when price rebounds like this, that's when you get your third and final confirmation that the trend is changed. This is probably the most useful thing right now when you see that when you open your checklist and you see that the stock has moved like this somewhere and you want to enter into it. Maybe as an investor or as a trader, what you would see is this. First thing you will draw is, you draw a trend line from top, the top whichever it has made, maybe in 2017, 18 or recently for Nifty in 19. This is what you'll see. Now what you will do is don't rush to get into a stock or get out of a trend. If you are short, remain short till the trend change is confirmed on a lower time frame probably, because if you are short you are leveraged. And if you are long, and if you want to go long, then you have to wait for confirmation first, because you never know what you are seeing now in last 2 days might just turn up to be another lower high. Okay, what we would be looking, particularly for investors, is a price change like this. This is going to provide us a first confirmation. A second confirmation would be this. This is our second confirmation. And then when price moves up, it makes a higher high over here somewhere. Higher high, higher low. This is the spot when you want to enter. Now what you would do is you would use this period to scan the stocks fundamentally which you want to enter, and then you would use something like this, a Dow theory, to know what is a good entry point. Okay, so now this has been the theoretical part. Let us just go and look at some charts to understand how this works. So first let us start with Nifty. Okay, let's see now. Let us first begin with a weekly chart for investment purpose. See, what you would see over here is, if you are following this, what I said the Dow theory, what you would notice over here, just a minute guys. Okay, what you would see is that this over here, this is a major trend. This is a major trend, and this major trend is followed by this small, let me change the color so that you would appreciate it well. Okay, this is made up of these small trends. Even here, see when it is falling. Okay, so every major move is followed by the small move. This is what we saw in the Dow theory, right? And what we want to see is further is change in price trend. Okay, see, the first thing that we see over here is that at this place, this low was crossed. It was crossed, it broken the trend line over here. If you could see, it broke the trend line over here, but it did not broke the previous low. Okay, so this is how you are going to follow trend. Now let's go in a daily price and see where we are, or where we could see that probably the trend was changed. I think daily is probably the most important price level as a trader you should be seeing every day. Look at this. This was a swing low. This was a previous swing low. This both were broken over here. You understand it? This both were broken over here. And if you draw a kind of trend line from the recent lows, what you would understand is this is how the trend line was going initially. Okay, this is probably what our trend line is. Here Here you could see that we made a high, we went for low, we made a high, and here we are breaking this low. Here it was clear that market is up for a sell-off. The trend has changed. And what you could see, what happened after this, is what we all know. So as a trader, as an investor, what you could have done is you could have got out over here somewhere. And this entire price movement you could have got out. You had an opportunity as an investor as well. Because if you would have gone out here, you would have been somewhere around minus 10 odd %. But now we know where the investors are mostly. And especially those who have kept buying in the all the way down over here. So let us discuss somewhat about what would be the future plan, like what can be done now, both for traders and investors. Okay, just a minute. Okay, now this is how your price movement is. Once your top was formed, this is how the price movement has been. And like this somewhat. I got really pathetic drawing skills, I know it. So now your trend is not changing unless this is crossed. Or else a new low is made, and unless that is crossed. You as an investor and as a trader should be worried of buying now as well. Because you know what can happen? A price can move somewhere around here and it may drop back again. I'm not saying it will, it may, or it may go past. It may go past from here also. If it does, you have a buying opportunity. This is basically Dow theory that we wanted to do. Let us pick any random stock. Let us probably pick up Divi's Laboratories. And what we can see over here is we'll convert it to weekly charts first. And what we can see is this. Look at this. If you see any you can open any chart. What you do is you actually spend this time on charts. Once you see the theory, you will more appreciate it once you look at the charts yourself. Okay, so now what we have here. Just one more minute. Okay, this is for short-term traders who trade in cash, investors, not very short-term traders, but long-term traders actually. Even for investors, right? What you would see is this is where everything changed. It broke the previous high. It broke the trend line that was going there, and it made a, what did it do? It made a higher high, higher low. This is what you are looking, right? All the confirmations are over here. You were supposed to be a buyer at this tick in this candle, and your entry would have been at 870. And from 870, if you if you draw a trend line like this, what you could see is that we are still in uptrend. The trend is not broken yet on a larger time frame for investors. The trend is not broken yet. We are still in uptrend, and that's why what you would see is that this is the stock that has got the sharpest of move on the upside. Look at it. The low is at somewhere around what, 1650, and where the price has moved in a matter of days, somewhere around what, 2000. This is ability of technical analysis, guys. In this Mahim, if you wanted to buy a stock, it was this, because it was still in its long-term trend and it had the opportunity to enter. 200 rupees in matter of days is what you could have earned in the stock. That's probably what, 10% in matter of days. So basically what we saw is Dow theory. Now how to enter, how to exit, we'll do it later once we go through candlesticks and some other important stuff. But what you could see now over here is what I was telling you about Dow theory. That every move, look at this small moves, this major move is made up of this various small moves. This is the Dow theory, and unless the previous lows are broken, the trend is not changed. Unless previous highs are broken like this, the trend has not changed. This is particularly very important for investors. Now I'll show you the most prominent examples of where this could have helped investors out. We will start with Yes Bank first. Probably everyone's favorite stock as of now. Just a minute. Yeah, here we go. Okay, this is what you see, the low over here. You draw a trend line. Somewhere like this. Okay, let us go to daily charts and understand how the prices move in the stock. Okay, this is your trend line that you draw on weekly charts, and over here you see the trend has been broken. If you go to the weekly chart, you'll see that the trend has been broken over here, and this candle breaks everything. Okay, it breaks the trend line, it breaks the support line. It has actually broken multiple supports. This is where a trader would have halved his position, and this is where investors should have been gotten out, somewhere around this range. If not that day, investors had an opportunity to do it over here. Investors had an opportunity to do it over here. How about it? Exactly at the price. What was support? You have an opportunity to exit over here. Here an investor would have gotten out at 283, and we have seen recently the price was somewhere around in single digits. And it never gave a buy. Okay, it never. Here we go on a weekly chart, and what we see is this. Okay, a major move over here like this. This is where market told go out. Here, every kind of support is broken and everything is broken. This is for investors, right, who are following it on a very large time frame. This told you get out. You could have got out over here somewhere at 400, and look what happens to the stock. It never ever recovers. Very simple thing. It will get you out of most of the duds. Even at 20-30% loss, you would be out. You won't be wiping out your accounts, and most importantly, you won't be averaging down any Nifty itself. This is for investors once again. Just a minute. This is small cap Nifty. Yeah. So let me clear the charts once. Remove drawings. Yeah. You take any crisis period. You want to take crisis period of 2015 to 16. We'll go with 2008 because that's probably what resembles the most with this kind of fall that you're having now. One thing you had to do, as we discussed, draw a trend line. You didn't have to wait long. This is your entry point. If you want another good confirmation, this is your entry point. If you want to be conservative, here somewhere. Somewhere around 3,200 you could have entered using just simple trend line and Dow theory. Conservative entry was 4,700, and you can see what price could have done. This was your exit. 5,700 was your exit, and you could have re-entered. You keep checking this. It's so simple. You can ride an index also using this. Raw trend line. The trend line is broken. High is broken. You buy some ETFs over here. Okay. This is your entry point. This is your entry point. Somewhere around 5,300. Trend line. It wasn't a sell ever. Simple things, guys. Simple, very, very simple thing. Anyone can do it on the charts. From 5,400 that we entered, trend line is not broken. Now if you see there's a major shift, you can draw another trend line. This would act as a second trend line. Doesn't mean that the first trend line has lost importance. See, there is no signal to sell whatsoever. Right from 5,300 we are following it. And here somewhere the trend line is broken, and probably here you would get out. You would get out at 8,400 something, and you'll draw a new trend line, this time downside. You see how effective it is. How effective it is even for index investing, guys. Just look at the beauty over here. Here, you enter again somewhere here. What, 7,700 something. And then again you are long. This was probably a this. We have still, this is the trend line. Brilliant, isn't it? all you had to do was keep buying, keep buying, keep buying. So it did close once below trend line, but it did not close below the lows. That protected you there, and you're still in somewhere over here. Okay, let us just zoom out and see if we haven't missed anything. Here again, slow, and yes, you are out of market. You are out of market at this point. Here you are out of market. You are out of market at 11,100. And if you re-entered, for whatever reason, you re-entered somewhere, maybe following another trend line, and you re-entered over here, you are out of market over here again, right? You see, here at this point you should have been out. What, 11,500? And where we are today, we made lows of 8,000. Very useful tool is this Dow theory for both investors and traders. Next up, we'll see candlesticks. If you like it, please do share. Do follow me on Twitter. I'll be sharing my Twitter ID with you all. Just a minute. Just a minute, guys. It is KAREN Karan TTANI Dattani 94. You can follow me on this. If you have got any queries, you can DM me. And what else do you want to see on the videos? What else do you want to learn? You can message me and you can write it in comments, and we'll continue with candlesticks for next video. And as we progress, it will be more towards trading, because finer candlesticks and such things are more useful for short-term trades rather than long-term analysis. If you go on a longer chart, monthly chart, it will be helpful for investment as well. So thank you everyone, and I hope you liked it, and I hope it was useful somewhere.